What is going on, Elf Hunters? Hope you guys are doing well this Tuesday. It's Terrific Tuesday, right? Or some kind of Tuesday. Terrific Tuesday, or Terrible Tuesday, or Troubling Tuesday. I don't know. It's some kind of Tuesday. I'm feeling pretty good, though. Hopefully, you guys and ladies, are doing well today. Feeling pretty good. Not really seeing much movement on the market except for the IWM. The IWM, nice little bullish activity pretty much the whole day. Pretty much the whole day. And, the Qs, SPY pretty much right on top of each other. DIA a little bit lower than the Qs and the SPY. But Apple had a nice little sell down in the first hour or so. Hour and a half of the day, I guess. Nice little bullish run here over the past couple hours, though. So we will take a look at a few things, but I am being a little cautious here. I'm not gonna lie, because what I didn't want to see, I don't want to see this, is we broke above the channel that we've kind of been in the previous 3 weeks, and we broke above it, kind of retested into these lows. Obviously rejected there. Now we pulled into the top end of that channel that we were kind of sitting in, and also these moving averages, right? We got above the 50, the 50, the 20, and the 10. Yeah, I don't want to see us just retest into this level now, kind of like what we're doing. It's a little bit easier to probably see on the hourly. We popped, we came up to a spot, we rejected. Now you can see that we very clearly are retesting this morning, and not the brightest looking price action right now. Definitely want to see us break today's low. Hopefully we can do that by tomorrow. But if we start to run up towards the end of the day, it's not going to look good. And I could say we could probably make a run higher, at least take out this high. So I might even be tempted to take off the puts for June, that position I have out there, and wait for the pop then, and maybe add back in later, just because it would be just kind of an easy run. I think higher, maybe up to about, I don't know, 400 or so. I don't think we get up that high, but it's one of those I can just take it off, save a couple bucks, put it back on up at a higher level. Anyways, I'm kind of thinking that right now. We're gonna have to see how maybe today goes and tomorrow. Definitely want to see us at least break this low by tomorrow. But if we start to run up a little too hot towards the end of the day today, it's not going to look good. Not going to look good at all. But we'll look and see what's going on in the market, what's moving. Maybe there's some false breakdown things kind of going on out there. And we'll see what we can find out. Apple obviously had a very nice breakdown the first part of the day, has climbed all the way back basically even. Even Apple AAPL even retested into kind of like a little double bottom, little pivot top here in between that double bottom. So yeah, not looking the best out there if you're trying to be bearish. So we'll have to see what it kind of holds. And I know I kind of want to give it some time. So I know it's Thursday we get CPI, and then Friday we start to get a lot of the earnings. Trying to kind of hold in there, but I don't want to see us just run up. And we might run up maybe Thursday. Maybe we continue higher tomorrow, and then Thursday we gap up to maybe like 398 or something like that, and then kind of come back down. Kind of fill this gap that we have between these 2 days. Back on December 14th and December 15th. Yeah, between these days on Wednesday and Thursday of that week of FOMC and CPI. So we do have a little bit of an open gap there. So maybe if we fill that, possibly on a gap up on Thursday morning CPI, that might make some sense. But yeah, definitely seeing, oh, look at that. A little gap on a 1 minute. Wow. All right. You don't see that too often on the SPY. Wow. Yeah, that's kind of what I was afraid of, man. I think we're going to probably see a run up here towards the end of the day. And that's really kind of a bummer. The question is, now I'm gonna have to wait I'm not gonna like change anything, but yeah, it is definitely one that we retested right into the top end of that channel that we were in. All right, whatever. We'll take a look at it throughout the hour. First Solar, just screaming higher, man. Jesus, it's like risk on. Forget all the things. Just go risk on. Sector analysis. What is down today? Utilities are down about 0.5%. Okay. MLK or MLK. MLK weekend this next Friday. Markets will be closed. There you go. XLK Tech. Yeah, looks very much like the Qs. Looks pretty good and looks a little bullish today. Yeah, nice little run up here over the past 10 minutes or so. Okay, XLRE down a little bit. Nice little gap down there on the XLRE. Real estate. Materials. So materials are leading. Okay. I wonder what gold and silver are doing. Materials are up. So the XLB is doing pretty good, up a little bit over 0.5%. Industrials hanging in there. A lot of things look like they had a little bit of a gap down, kind of getting bought up this morning. XLV. Whoa. XLV actually did break down yesterday and closed below the consolidated range that it had put in over the past couple weeks. And really, it was what was the Friday's lower hammer wick is really the close below. So yeah, healthcare not looking too good here, and it's been one of the brighter spots on the market for a good while, especially during this bear market. That's not looking good. Past couple days of price action not looking the best, but it's doing pretty good today. It's the third best performing sector on the market, behind discretionary and XLC communications. So XLF doing pretty good there. Okay, XLRE. I'm sorry, XLE Energies up about 0.5%. So it's kind of in line with the market. Yeah, and discretionary see doing pretty good there. Discretionary probably going to make a little bit more of a run, a little bit more of a retest into some of these lows. I know it's kind of like just getting into them, but it makes sense it goes a little bit higher. Staples pulling down a little bit, but doesn't look. I mean, it doesn't look bearish. It looks like it's just kind of just hanging out more than anything else. All right, XLC. Ooh, there you go. That's where the movement's coming today. Look at that. XLC looking very strong and solid there. Up 1.2% on the day. Okay. Okay. Discretionary discretionary versus staples. So that's the funny thing about discretionary versus staples is it might make a run to these little double lows, these little double bottom lows before we broke that down. So it might continue to run up a little bit more here over the next couple of days. And that's not to say that staples doesn't start to sell off, and discretionary doesn't start to sell off, and discretionary just doesn't sell off as hard. It kind of gets the discretionary to pull up higher into this, or the XLY XLP ratio to pull up higher into this. All it means is discretionary is outpacing staples. So I would expect for whatever way that they're moving here in the next few days, that discretionary probably continues to outpace staples at least here over the next couple of trading days, and then we might see some bearish activity kind of come in on this ratio. Growth value, yep, just kind of hanging out, not doing a whole lot. Definitely seems like it wants to roll back, wants to just push lower as it's just kind of consolidating here. Had a nice little breakdown of a previous low, and now it's just kind of hanging out there. So it looks like it's probably just going to continue. SLY, so small caps doing pretty good today, which makes sense because the IWM is doing pretty good. Mid caps doing about the same. A little bit underperformance compared to the small caps, but small caps up about 0.85%, mid caps up about 0.6%. Okay. There. Let's go check dollar and stuff like that. Kind of Ooh, nice little 1 minute there. Okay. All right, let's check the VIX. The one thing about the VIX, though, obviously with the JPAL talking this morning, there was some implied volatility kind of in the VIX early, and you can see that this thing has gotten smoked today. Man, nice smokage going on there. Nice, that's what you want to see on a brisket. Looking very good. Market's not really, and this has been getting crushed even as the market earlier in the day wasn't really performing all that well. So um, it wouldn't. I guess it hasn't surprised me that the market's moved bullish because yeah, there was a lot of VIX drop early in the day. Dollar obviously broke down, made new lows yesterday. Now it's just kind of hanging out. 10 year, nice little bounce back there on the 10 year. See if that changes anything here in the next couple of days. The inversion yield has continued to climb back up. Has continued to climb back up here. So either we're going to continue to chop down here, just chop sideways here on the inversion yield. And the inversion yield that I'm looking at is the 10 and the 2 year. Just chop sideways. I doubt we break that down. I mean, 'cause this is already hugely inverted. The lows that we got down to. Turn off log. So yeah, you can see that. I mean, this is like crazy low at these levels. And we might chop sideways here for a couple months because that's typically how it goes. You know, when you kind of get down to those extreme levels like that, you kind of do have some chop sideways. You know, even like this back in '06, before you kind of get out of this. But I would say once we do take out the high that we just put in about 2 weeks ago at the end of December, I'd be willing to say that yeah, we're probably going to start to see this thing really start to move back to the non-inversion area. Gold. Let's see what's going on with gold and precious metals. Yeah, nice little hangout day on gold. Okay, HYG, LQD. Both are down a little bit. LQD's down a little bit more than HYG. HYG is pretty much flat. It's pretty much flat on the day. It's not doing much. LQD though down a little bit, down about 0.5%. I think we're just in a waiting power. I don't even know what I'm talking about. I think we're just in a waiting period, right? We might not even see much out of the market tomorrow, so I might not mess around with anything. But I mean, this is what we continue to see, right? We just continue to see like possible rollover gets bought up, and we've been seeing that for a while now, for the past couple hours. And that was really after we retested that low, or retested into the highs over the previous couple of weeks. But yeah, that low that we made today, I didn't really like that zone, and we just immediately bounced from there. Yeah, it's kind of one to be cautious on, but there might be a lot of people just waiting for Thursday. Thursday might just be a big day. We might not move much tomorrow, and then we got earnings on Friday. So those are two big back-to-back days, and then early next week we'll finish out with the financial earnings. So we will find out pretty quick what's going on. There was a video I saw yesterday. It's kind of intriguing, but it was basically a channel out there, Game of Trades. If anybody watches it, they made a comparison between the XLU and the SPX, and I hated everything about that video. I'm not gonna lie, I hated just about everything about that video. So this is the entire relationship of the XLU SPX. All right, the XLU is obviously the utility ETF. The SPX is the S&P 500 index. And one of the things that they basically said was, we have a very clear downtrend of highs. So we have lower high coming down. Okay, I mean, fair enough. If that's how you choose to do your analysis. Here's the problem with doing that analysis. Okay. The XLU pays a dividend. The SPX is an index. It does not pay a dividend. So down here, if you turn on adjust data for dividends, you notice it's a little bit more flat. It's a little bit more even over time. So that's very interesting. And it's one that, you really need to know what your comparables are in doing your analysis, right? Because if you did see that video, one thing that they were kind of calling for was a move back in. Let me do this. Put that trend line back there. One thing that they were kind of calling for was potentially a breakout and moving back to a more normalized range. If you're looking at it this way, I would say, yeah, that makes perfect sense. But if you compare apples to apples and take into account the dividends, this is why you got to get rid of that downward trending line. You can see really the upper end of this ratio is at 0.02, right? This is about the top end of that spot. So, not to say that the tops aren't somewhat aligned, but I would say once we get kind of back up into that 0.02 area, doing it this way, and make sure you're adjusting for dividends, then that probably would be it. I couldn't imagine it going much higher. Obviously, the one time it's gotten really above it was back in the financial crash. And it didn't last too long. It lasted for a couple months and came back down. So it's just one of those things. Make sure you're comparing things correctly. And if you compare the XLU and the SPY, which these both pay dividends, right? These both pay dividends. I'm gonna turn the adjusted for dividends off, right? You can see we do have a little bit of a downward trending area here. It's not too much indifferent of the SPX, but here's the thing: is the XLU and the SPY, these both pay dividends. So these both pay dividends, so they're a little bit more comparable, and the XLU is actually a representation in the SPX or the SPY. So these are a little bit more comparables. So, but if I turn on adjust data for dividends, you will see that we do have a little bit of a downward trending line, right? We do have a little bit of a downward trending line, but it's more of in this area. So we do have maybe a little bit of room to run here on utilities comparing to the S&P 500. So just one of those things that I thought it was just worth noting. Like when you actually want to get in there and nitpick on the analysis, like you need to make sure that you really kind of compare things correctly, or it kind of just throws off your expectations for certain price moves. Because if somebody gets into a position where they go long in the XLU and they short the SPX based on the analysis that they provided in that video, and they're looking for a much larger XLU, SPX, and they're looking for a much larger move, up into this zone, then obviously they probably won't even get it, right? Especially, just because it doesn't look like, because that would make this have to move way above its actual resistance level. So you got to make sure you always account for dividends, especially looking long term when you're comparing things. Just because dividends are a factor of the rate of return, right? Because when you look at the XLU and the SPX is purely price. It's purely price. It's all price return. XLU has a lot of price and dividend returns. And utilities are notorious for paying really high dividend rates. So a lot of their returns are in dividends. So you need to make sure that you have those right comparables whenever you do that kind of analysis. So But this is probably the best comparison. Make sure you have adjusted for earnings on. You probably still have this downward trending line. It's just not as aggressive as the one that they had, and you're probably looking for a little bit more of a comeback to that top before we're done. But you do notice that a lot of these peaks, are around where we have major financial, not financial, but major market bearish market conditions. Obviously, at the beginning of '09. We did have some pretty good bearishness in 2011. A lot of people thought we were going to go roll back over. And then there's pretty good bearishness in the middle of the 2010 decades, around 2015, 2016. So some pretty good bearishness there. And then 2020, obviously the COVID little spike right there. So I'd expect us to probably go a little bit higher on this ratio. Which then, if you're looking at this ratio, what that means is we're probably going to go lower on the markets because utility stocks don't sell off. What normalizes here is the stock market, or the SPY, sells off. XLU will not sell off as much. So that's kind of how that relationship will play out. So that's just kind of what I was thinking about when I was watching someone's video. A lot of people do analysis, but they just don't do it right. I'm right on everything. No, I'm kidding. I'm not. It's just experience. It's just experience. I'm trying to know how to line up when you're doing analysis, making sure you're lining things up correctly and making sure you have the right comparables. If you don't have the right comparables, your analysis is it's completely ruined. So, yeah. Anyways, if anybody else saw that video, it was put out by Game of Trades, basically talking about the XLU and the SPX. But the better comparable is probably the XLU SPY, and make sure you have adjusted for dividends on. And this is probably what you're looking at on a monthly time frame, or monthly calendars, monthly candles. All right. We'll definitely want to take a look and see what is moving around in the market. This might be something that we kind of watch, though. I mean, obviously, you can see last month, the market was doing pretty good. Or, I'm sorry, not the market wasn't doing all that great. Obviously, the market sold down pretty good after it got CPI and FOMC last month, and you saw the XLU. It did its thing, man. It just kind of hung in there, and it got this ratio back higher, right? And that's because the SPY in the stock market sold off. And if you look at this ratio, what you have here over the course of October, November, I'll zoom in a little bit more. October, November, and December is you have a very nice Morningstar candle pattern form out here with a very nice close above the original body that was started, body high back in October. So if it just kind of hangs out, does a nice little inside week or inside month here over the course of January, might continue to see this push higher over the course of the next couple months. Hopefully, it'll be sooner than the next couple months. I would really like to see this get running, but this might continue to rise, over the latter parts of January. So, anyways, if you got any questions, let me know. If you got something that you want to look at, let me know. I just wanted to kind of clear some of that up. I know a lot of people watch different videos on YouTube and stuff. A lot of people trying to get analysis right now, trying to figure out the best way to kind of position, best way to, allocate resources. Is it right now a great time to buy, all that kind of stuff. So everybody's trying to find answers, and answers are very hard right now, and that's kind of the whole point of bear markets, right? They're not meant to be easy. It's not the point of them, but they're not easy. They very much are choppy, and they make very quick, sudden directional movements. And sometimes they're just fake outs. So just kind of looking at the market here. Very nice volume kind of coming in here on the Qs. Basically since I came on. Okay. And not even breaking the high of the day. So interesting. I know the SPY retested into this 390 perfectly in the start of the day. So and there it goes. It breaks right above it. Yep, there it goes. So we'll see if that is the start of a continuation of this trend and breakout. But yeah, there's a lot of volume that was coming in there over the past 30 minutes or so. AAPL, yeah, just hanging out. All right, let's take a look at anything news. I'm gonna see if J Powell said anything this morning. I don't think he did, 'cause it doesn't seem like the market responded to anything. Powell defends Fed taking measures that are not popular to rein in inflation. That doesn't sound bullish. Curious if they said anything specific. The case for monetary policy independence lies in the benefits of insulating monetary policy decisions for short-term political consideration. Diacola, yo yourself, bro, dude, bro. How you doing, man? You just wake up from your nap time? I'm gonna need some hot milk and a nap after this. Price stability is the bedrock of a healthy economy and provide. He's not wrong about this, okay? And for a lot of people that are talking about, oh, the Fed needs to pivot and stuff like that, dude, those are people that just want to see asset prices go higher so they increase their value. That is it. He's actually talking about the economy, and what they've been talking about for this is absolutely true. It sucks that we have to deal with decreasing asset prices on the short term, but he's not wrong. And they've been saying this for several months now, several months. It provides the public with immeasurable benefits over time, but restoring price stability when inflation is high can require measures that are not popular in the short term as we raise interest rates to slow the economy. Yep. I mean, I agree with everything he's doing. It kind of sucks, as it seems like they should have started that that fight sooner, back in 2021. But but everybody was kind of saying, oh, it's just temporary, it's just transitory, whatever that means. But yeah, it wound up not being transitory. So uh, that explicit congressional, but without explicit congressional legislation, it would be inappropriate for us to use our monetary policy or supervisory tools to promote a greener economy or to achieve other climate-based goals. Powell said, "We are not and will not be a climate policymaker." Interesting. Okay. Well, don't even know why he's talking about that. I do know he said they are not a political institution or establishment or anything like that. They do not do politics. They do policy. They do monetary policy. So everybody trying to there's two big aspects that go into finances. One is fiscal policy. One is monetary policy. They are the monetary policy. The fiscal policy, that is the government. That's the government spending money. That's the fiscal side. So there's nothing they can do on the fiscal side. Obviously, they don't do anything with politics. Yep, there's nothing really to talk about there. And I think he's done a pretty good job, even over the past couple of years, not getting involved into that and saying, "Hey, all you politicians, stop spending money. It's making our job hard." Let's take a look at energies. I know energies have been. Excuse me, I got a cough. Yeah, let's take a look at energies. I don't think we really looked at energies too much over the past couple of days. Ooh, look at that! I remember the first part of the year. Yeah, we got these huge sell downs. Um, yeah, if we start to just make a run back up, take out these highs, it could be possible that crude oil could have bottomed. It's very much going to be dependent if. Actually, I could tell you what you want to look for on crude oil. We break above that high. We break above. I'm sorry, break below this low. This low will send us down to here, down to the previous low, and then most likely we'll probably just break that down. But yeah, crude oil looking pretty good. so far. Gasoline looking pretty good. It didn't sell off nearly as hard. Okay. Gasoline not looking too bad. Let's check out some of these oil and gas stocks. ExxonMobil. Man, I'm so tempted. So tempted to get in bearish on some of these energy stocks. You know what? I'm going to do this. XLE divided by SPY. We're going to look long term how these. We might look. Actually, we might run through all of the sectors and just look and see how they look comparable to the SPY. It's actually not a bad idea. How are they? How are some of these moving? This is looking pretty good. Might continue to perform with the market for a little while and kind of consolidate and then push higher. I don't doubt that the energy sector is going to continue to be bullish. So yeah, I would probably continue just to be bullish on oil and gas stocks for now. What about XLF SPY? Might be a good opportunity to be getting into some XLF. It's been down at these levels for about 14 years. 14 years. Yep. It's kind of made an even lower low than the financial crash. Made an even lower low in the pandemic sell-off COVID crash. Just underperformed pretty much all of 2020 until the second half of the year. Yeah, I also would be digging financials. They past few months I've been playing financials a little bit more bullish on the trading side. Looking not too bad there to probably be outperforming the SPY. If we do the XLK SPY, it's had a pretty good run. I'm not going to say it's going to be like crazy bearish. Nothing like this. It's not going to be like this. Obviously, you can tell it's not going to be like that. We didn't have the euphoric super buy up spikes like we did back in 2020 or so. Or, I'm sorry, 2000. And obviously, we're not getting the crazy, sell-offs already. Like, they were already selling off pretty violently. So I would imagine it probably just continues to come back down. What I'm basically saying, XLK is probably just going to continue to underperform the SPY. Maybe for the next year or two. And then what about? So we looked at utilities, XLRE. We'll look at the real estate compared to SPY. Oh, it's okay. So this is relatively new, the XLRE. All right, well, pass on this. XLY SPY. So consumer discretionary is already beginning to hit pretty good since the beginning of last year. Yeah, probably just going to continue to see this come back down even more. Okay. XLP SPY. Staples probably looks like it's going to go a little bit higher. Been performing pretty good over the past year. Okay. Jeez. I can't remember all the sectors off the top of my head. XLC. Let's look at XLC. XLC SPY. Yeah. XLC SPY, man. That's that might be some pretty good opportunities in XLC, I guess. It's just not long term, not super long term, so it's kind of hard to tell, but it looks pretty good. Obviously, it's at a much better of a discount area than it was at the beginning of last year. Actually, the end of 2021 is really when it was up here, like in Q3 of 2021. All right. Okay, we did XLC, PY, we did E financials, XLV, SPY. Okay. Healthcare SPY. I would say this might be an area where I would be taking it off. I mean, you're kind of up at these kind of upper levels on healthcare. It's long term ratio with the SPY. I wouldn't be looking to be long on healthcare for now. What about XLI SPY? Industrials? Uh, this one's also kind of sorry. SLI SPY, XLI SPY. There we go. Like, man, that looks so weird. Uh, I'd say there's some opportunities there. There's others that look better. Financials probably look better. Yeah, that doesn't look too bad though. Industrials. You got like kind of like this little double bottom type pattern that's played out, breaking above the neckline, getting kind of up into these previous ratio lows. I would say probably might pause out here for a little bit and continue higher. XL, let's see, B, materials and SPY. Materials starting to look a little bullish here. Nice little consolidation. Kind of at the upper end of these past couple year highs on this ratio. So if it breaks above that, man, I can see it being bullish. And you really got to think about gold, silver, and some of those type of materials at this time. If they're looking pretty bullish, then I would say this is probably gonna be bullish as well. The big reason why you do this is just to get an idea of where money's flowing, right? Where money's flowing, and if you can find those opportunities where that they're lower, it's lower on the ratio compared to the kind of like the long term spots, then you can obviously where to start focusing and to find stocks to invest in, right? That's kind of one way you outperform is you find the stocks that are going to perform by finding the sectors that are already performing. So that's XLB. We looked at tech, we looked at utilities, we looked at real estate. All right. So that's pretty much all of them. Healthcare definitely seemed like one you don't want to be involved in right now. Discretionary is probably going to continue to come down. Staples didn't look too bad. XLP didn't look too bad. XLC, I can't remember the XLC. XLC SPY. Yeah, I would say XLC probably an area to be investing. It's obviously it's gotten hit pretty good. Expected to probably have some more drawdowns, probably as the market turns a little bit bullish for some periods of times. But I wouldn't. Obviously, you're at a pretty good spot here to be, buying XLC compared to the SPY long term. Anyways, that was kind of nice to do. Just get an understanding of where, how things are performing long term. All right, let's see what this. That's the daily. Yeah, I mean that looks pretty good. It's breaking that long term trend line. Look at this. Look at this trend it had. Man, it was just following that 50 exponential trend line just lower, and then it just broke it at the end of last year. Basically 2 weeks ago, beginning of this year, broke right through it. Looks pretty good to continue higher. Yeah, XLC might be a pretty good spot to be hiding out. Probably for next, maybe months, years. I don't know. Who knows how long of a ride that'll be on? It's such a new ETF. You don't really know for sure, but it's kind of really hard to judge where it's going to fit in longer term. But you gotta like how it's performed here recently, and how much of a sell off, I guess, underperformance it just had. All right, let's check the SPY. Curious. It's just, man, it is just holding on to that 390 level. It's not really breaking out. It's not breaking down. Just hanging out there. Q's kind of the same way. Just hanging on to that like mid 272 area, 272.50 or so. All right. AAPL. AAPL, not really performing all the best. All right, let's run through some of those big tech names. I know Amazon's kind of crushing it today. So Microsoft, ooh, two upper wicks back to back on Microsoft. Checking into that 10 exponential moving average on a daily. All right, that not looking the best there. Google had a very nice gap down today. Let me look at that 5 minute and got bought up immediately, and has just hung out ever since. Okay. Still just kind of chopping down here. It might wind up breaking down. And if Google does break that down, it's going to be really tough for the market as well. Amazon, Amazon breaking above that higher wick yesterday. That's looking pretty bullish. Amazon might be looking a little intriguing here. Amazon might be looking intriguing. Let's see what you look like on a weekly. I know it got down to its COVID low. It did not break its COVID low. Low of 81.30 at COVID. Low last week 81.43. So it missed it by about 13 cents. If that would have snagged that low, I would have been game for that. I would have been a little bit more intrigued about being bearish there. So, all right. If anybody sees anything else moving today, man, I don't see a whole lot moving though. That's the thing. Oh, Tesla. I want to look at Tesla. I meant to look at that earlier. Tesla. Finally, I mean, just hanging out. I'm kind of tempted to take a bullish. All right. Kind of tempted to take a bullish, but what I could actually see playing out here is we had the sell down. You had a little shoulder, a little neckline, head, neckline, possibly a shoulder retest down in like the 109 type area, and then maybe a little bit more of a stronger rally up out of there later on, maybe later in January. But I could see this thing pulling down to 110 or 109 type area and being bullish right there. People trying to be bullish and make this inverted head and shoulders pattern kind of play out. I'd be a little bit more leaning that that does happen. But just because Tesla got hit so much in December, they got absolutely obliterated. Deere, man, Deere looking solid there. Cat continuing. Yeah, I mean, there's a lot of things that are looking really good. What about Nvidia? I know some of these semiconductors had a pretty good day yesterday, but they got obliterated in December. So I don't know if they're just trying to retest. And here's one thing that you really got to watch on Nvidia is you really needed to get over this kind of support and resistance line. It just smacked into yesterday and today and hasn't really broken above that. Yeah. AMD, Intel, AVGO. AVGO. All right. Qualcomm, Western. I'm gonna look. No, Texas Instruments. Yeah. Man, it is so tough. It's almost like a lot of things that have been running pretty good over the past couple of trading sessions, kind of just like getting in there to where they want to continue higher, and maybe they will. But people are taking the opportunity to take stuff off on any kind of bullishness, so it's kind of hard to tell which way he's going to win out. I was liking the retest higher yesterday, but I was really wanting that follow through on the market. Right, we really wanted to see this follow through on the bearish side, and not to say they're not. I mean, we haven't continued to see the follow through. Obviously, if we come back down towards the end of the day, and in the day kind of even, like that's nice right now, that's nice. But if we can make a run towards the end of the day and end the day around 388 on the S&P 500, I would be really kind of happy with that, as we would have an upper wick on today's price action, kind of retested into that 390 level after the breakout and then break down yesterday. Might set up with an upper wick kind of to continue to push back into the bearish direction tomorrow. So we'd have to see. But that's what I'm going to probably be looking for tomorrow, as we go into close today, is kind of where we close. If we get down about 388, I'd be really like that. Mostly because I don't think we would continue higher. It makes sense that you got some kind of like try to bounce higher as you got all these moving averages kind of underneath you. But all right. Then what about Western Digital? Man, look at that move. Ooh. That thing's been moving pretty good. Look long term. Yeah, that's a pretty good spot to be long term. Yep, that's a pretty good spot to be long term. Western Digital might be a really good pickup here. It's bounced down here about 3-4 times. One, obviously it broke out of here, and this is the thing, is like this was a good resistance level back in the 2008 to about 2012, and then it broke out, retested there once, twice, two, three times right there, another 2 times like right here, and kind of at that spot again. Storage, man. Data storage is a pain. It's not going away. They just continue to think of things, what they want to store on data. Check out Meta. Meta's continuing. Netflix. Man, Netflix making a run today. Wow. Holy cow. Okay. Netflix making a run. I'm still thinking a break below this low. Yeah, bearish. Bearish. We'll find out what happens here in earnings time. Are these companies getting things figured out or are they not? Walmart, Target, Etsy. A lot of things look good, but man, a lot of things I just don't want to take that shot on right now. McDonald's. Move this off the side here. Yeah, McDonald's. A little inside action today. Disney. Yeah, you had a lot of capital flow into the markets. There's a lot of things that had buyers come into it at the beginning of this year. There's a lot of things that look pretty good. Run through these financials real quick. JP Morgan, looking pretty good. Goldman Sachs, not looking too bad. Bank of America. Yeah, their sell down yesterday on Bank of America looks pretty nasty. Wells Fargo. Yeah, the regional banks major banks don't look too great. The investment banks look okay. Citi. Yeah, it looks okay. It looks okay. What about Schwab? Charles Schwab. Oh wow, look at that. This has been a pretty good run here. Okay. What about AMX? Nope. XP. American Express. American Express. Yeah. Nice little lower retest today. A lot of things, man. A lot of things have that. Just crush in mid-December, kind of just hang out and started trading back higher. Let's see what's going on here. Yeah, I think today, where we close today, is very, 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 very. I can't say that enough. Important. Uh, I, I don't think yesterday was such a big deal. I think it's today. Because we start to make a run and get above like 391 or around 391, I mean, we definitely might just continue higher tomorrow. And then who knows what happens with CPI on Thursday. Um, but if we get down to about 388, it'll look like we're probably going to continue back in the bearish direction and possibly break down then on Wednesday. And if we do that, we'll see if CPI saves the market then on Thursday. Yeah, we're about to get some noise. Let me know if there's anything you want to look at. It's just a kind of a quiet day after Jerome Powell speech this morning. Didn't really lead to much volatility. Actually, it led to a reduction in volatility. A lot of, obviously you see the VIX trading lower, getting crushed off today. So not a whole lot going on there. Let's look at the U.S. 0.2 year yield. Yeah, hanging on to some of these lows that it's had over the past couple months. Okay. 10-year. Gold's hanging out. What is silver doing? Silver seems like it wants to roll over. Which I'd be very much okay with that. If you want to roll over silver. Very much. WM. Check out some of these. Are you good? You good, Rose? It's all good, man. Just listen while I work. Didn't trade the SMH puts, waiting for CPI. Yeah, that's not a bad call. It's not a bad call. Let's see. I'm just there's not a lot going on today. Like a lot of the small cap stuff did pretty good today. Obviously the IWM did really solid today. The Dow Jones not so much. Yeah, if we see Apple just kind of roll back over, get back below 129, this would be very good to be bearish on the market. I know a lot of people are like, oh, Apple's like the safe trade because, they make so much cash. But are they going to provide the same rate of return over the next few years that they've done over the last 20 years? Probably not. Time to go find something new. SPY 1 minute. Not too sure there. Speaking of SMH, let's go check those out. SMH did not make a new high, but it is kind of up there. What would be real interesting to see here on the SMH, I wonder if this is on there on the SOX as well. Okay, and XSD. All three of these have this gap. Here between Friday and Monday. AVU was down more earlier. AAPL wants to take away their 20% of the. Oh yeah, I think I saw that. I saw that news headline. Yeah. Um, what would be really interesting to see here on one of these, on the XSD or the SOX or SMH, is a gap down below, and definitely getting below both of these lows. You know, maybe like here on the SMH, if it gap down to like 213, um, because that'd be a very solid island reversal. Not only is it a very solid island reversal, but look how much volume came in on Monday. Out of all the previous couple of weeks, that's the largest volume traded day on the SMH. There would be a lot of people trapped there, and that push a lot of these stocks back in that bearish direction. Maybe we have another hangout day tomorrow, which probably doesn't seem too unlikely because I don't think we're going to get too much news, too much of anything tomorrow, unless people are trying to make big bets before CPI. The other thing I do want to see is a little bit of bullishness tomorrow. That's why I'm kind of hoping we roll back down a little bit by close. We see a little bit of bullishness tomorrow, and then hopefully Thursday morning, maybe have a good gap down on the market. But I'd be okay with a nice little sideways action day as well. I'd be okay with that. Apple, yeah, not really. Nothing's really wanting to lead today too much. Microsoft, man, look at that rollover. Just rolling. Alphabet, how flat that is. SPY SMH. All right, I'll check that out in a sec. In Amazon. Okay. Amazon was doing so good today. Wow. But yeah, this thing's been crushed. All right. I'll do the SPY SMH. There. Hold on. I'm going to do the SMH SPY because I like seeing it that way. All right, SMH SPY. There we go. So you definitely see the SMH outperforming the SPY here over the past 2 weeks or so. Yeah, 2 weeks ever since Wednesday, December 28th. Nice little bounce back action. Underperformed it for a while. I'm going to turn dividends on. See how much. Does it make a huge difference? Nah, not really. So. But it's kind of at the upper ends where it was November, December. And SMH. That just kind of goes to show you, like the market really hasn't. It's kind of gotten back into the zone where it was. Yeah, back in December. Interesting. SMH. But I would. Yeah, if we see this breakdown here on the SMH SPY, I would imagine we're selling off pretty good. I'd imagine selling off pretty good. Let me see, like, long term. Yeah, I'm gonna look pretty long term here. Do you think we'll come back down a little bit more on this ratio? I can make that case. I can also make the case that maybe it just kind of gets in here and goes sideways for a while. But I do. It might be at the upper ends of it a bit. Might be a little bit more choppy on the ratio side. if it came back down, especially like the point 0.45 to point 4, yeah, actually anywhere in here, 0.45 to about point 0.4, that would be great. I think that would be some pretty good stuff. And I am looking for those semiconductors, man. I am. I love that sector. Just got a little too hot back here. Just got a little too hot. All right, guys. That's about what I'm going to be looking for today, though. All right, I'm going to tell you. If we can roll on the market on the SPY, if we can roll back down to about 388 by the end of the day, I would be a little bit more happy. If we break up to about 391, I will not be as happy. I don't really want to see us as we've kind of just retested this morning into some of those previous past couple of weeks, tops. I don't really want to see that was the retest. I don't want to see that was the retest and we just continue to go higher. I'd rather that this was the retest and then we continue to break down. So, yeah, hopefully I'm not going to change anything just because I want to see what happens tomorrow and Thursday, Friday. But, yeah, I'm going to be a little bit more cautious if we do start to get up. But if we roll back down to 388, I don't want to see us get down too low, but 388 would be like money. That would be perfect. So like 388, 388.20, something like that. That'd be great. But Alpha Hunters, that's about all I got. There's not too much going on today. A little bit of flows in and around the marketplace. Not a great deal of things kind of moving around. Obviously, we see the XLC's been leading. Yeah, the XLC's been strong recently. XLC Healthcare's up there. A lot of things kind of lagging. Tech's lagging today. Interesting. Tech's lagging. Staples lagging. Discretionary's also lagging a little bit. So is the energies. XLU, the utilities are lagging a little bit. Financials. A lot of things are in the middle, just middle of the pack. A lot of things just middle of the pack. But one of the areas, XLC really outperforming, which then if they're outperforming, that means AT&T and Verizon should be doing pretty good. Wait, what? AT&T, there you go. AT&T up 2% today. Up 2%. Verizon's up 1%. So yeah, I mean that helps when those guys are up. So, Alpha Hunters, y'all have a great rest of your day, and hopefully we check in tomorrow and see what's kind of going on, and not much. Oh, yeah, WBD, Para. Oh, yeah, WBD. Paramount, my gosh. Or not Paramount, but Warner Brothers. Wait. Yeah, this thing might have bottomed. I like it, man. There's a lot of volume coming in here. They own a lot of content. I couldn't believe how much they were getting sold off last year. Yeah, that thing might have bottomed. You're probably going to get a pretty good retest. I don't see that thing making a new bottom, though. Paramount, though. Same kind of thing. Same kind of situation. It's looking pretty good. People are bottom feeding, finding stocks that have been hit for a while. Yeah, Paramount, wow. This thing has not even gotten close to its all-time highs. Wow. Okay. Yeah, that looks pretty good, though. Nice little bullish activity going on over the past 2 weeks. Yeah, it's interesting. If we see some things kind of settle out for both of these stocks, kind of some consolidations, I'd be willing to take some bullish plays on them. Yeah, definitely. All right, Alpha Hunters. Y'all have a great rest of your day. I will chat with y'all tomorrow. All right, take care, Alpha Hunters.